Welcome to November's Business Outlook Survey press call. Thank you all for joining us. My name is Marilyn Wimp, Media Relations Manager, and with me today is Senior Economic Analyst Mike Trebbing. He's going to be answering some questions from reporters. And today we have with us Ellen Furk of Reuters. We have Carlos Torres. Freilich, I'm sorry, Ellen. Eric Ruth with the News Journal, and Carlos Torres of Bloomberg. When you are not speaking, if you could please remember to mute your phone, we would appreciate it. We may have a few other reporters joining us later, and we'll take questions from them as well. Now, Mike, would you like to start with a summary of the survey?
Thanks, Marilyn. Indicators from the Business Outlook Survey in November suggest an improvement in the region's manufacturing sector this month. All of the broad economic indicators, including new orders, showed improvement this month. Firms reported higher employment, and the average work week also increased compared to October. Input price pressures were still evident this month, but prices for the firm's own manufactured goods were on balance lower. Firms continue to expect growth in their manufacturing business over the next 6 months, and the degree of confidence has improved notably over the past several months.
Thank you. We'll start the opening up to questions. Carlos Torres from Bloomberg, do you have questions?
Good morning. Yes, Mike. Just wondering, this month in particular, we saw sort of a stunning disconnect between your index and the one just next door, the Empire State one in New York. Have you been in touch with the New York Fed and sort of gotten a sense of why these two regions have diverged so much this month?
Yeah, we talk once in a while. They're distinct surveys. They survey slightly earlier than we do, being released on the third Thursday, where they're released on the 15th. They're all large manufacturing firms. They're just located in different districts. As much as it's a different survey, but the same intent, we do compare notes, and as you mentioned, I mean, there are differences this month. We're showing an improvement across almost all of the indicators, and still showing good expectations number over the next 6 months. So I have no explanation except that it's a different survey and for a different region, there was little evidence in our numbers of weakness this month. We had even comments that were suggesting some improvement. Perhaps the size of the improvement in some of the indicators will be modified next month, but we have no reason to think that our numbers are wrong for this panel.
Thank you. Ellen Freilich, Reuters?
No question at this time.
Okay. Eric Ruth from the News Journal?
Yeah, hi, Mike. Thanks for taking my question. Just wanted to get a sense as to how long it's been since so many of the sort of indicators within the study were so broadly positive. This seems, not having a clear exact memory, it just seems the first time in a while that we've seen that sort of broad indication of broad positive movement. Is that something that hasn't happened in a while?
I don't have exact figures, except the activity number is the highest we've seen since December of last year, where I think it was exactly the same reading. So we tend to focus on whether these indicators are positive or negative, and if the activity number sometimes is a little more sensitive to changes in improvements or declines, and in this case, in some months we also have differences in the direction of change in some of the indicators. But this month we actually had all of them moving in the same direction, including employment and average work week, and the comments also were we line up the comments we rely on the numbers rather than the general commentary. But I would say that the tenor this month was a little bit on the positive side. Perhaps not dramatic increases across the board, but just there were more firms mentioning modest improvements.
Very good, thank you.
Mm-hmm.
Okay. Carlos Torres, any more questions for you from Bloomberg?
One quick follow-up. Just wondering if, from the comments that you saw, if there were any particular industries that showed sort of a bigger advance than others in your region.
We don't typically break down the results for public consumption on the industry levels because of the size of the sample. About 85 firms based on this month's group, about exactly the same as we had the last several months. We do break it down, by business products and consumer products and intermediate products and capital goods products, and all of those broad categories were a similar story this month. So not enough data to know anything about industry, but in terms of those big categories, they were all consistent.
Thank you.
Mm-hmm.
Do we have a follow-up from Reuters?
Sorry.
Okay. And any follow-up from you, Eric Ruth Newstrom?
This may not be something that's possible to answer, but is there any sense as to what macro factors, in other words, influences dynamics in the broader market may have been influencing the positive trends?
Not from the survey itself. The firms often will talk about the national economy, and of course many of these firms are operating in national markets too. It's not just the region, but they're talking to their distributors and customers across the country. So when we do talk to the firms, we know that it's not only regional information that we're getting, but there's some element of national demand in there as well. And of course, on the price front, most of them are facing the same kind of price pressures on energy and intermediate material prices and that kind of thing. So we know from those answers it's reflecting national numbers too.
Okay. Well, thank you all for joining us today. Sure.
One question.
Ellen from Reuters, right?
Ellen at Reuters. Mike, are there any comments from people? I'm thinking not, but about how people expect, or are there people feeling better as a result of the expectation that the Fed is trying to support the economy, or nothing along those lines?
No, nothing along those lines that I can recall.
Would you consider asking?
Right.
In the future?
Again, we rely mostly on the indexes of the 6-month forecast rather than the comments. We look for consistency, I guess, in the comments with the numbers, but the last 2 months have shown some improvement in most of the broad indicators. Both October and November numbers were higher than especially the numbers this summer, where we were getting weak numbers on the current activity sides also. So that the higher expectations have held up now for 2 months. So there may be some good news there.
Okay.
Thank you.
Any other follow-ups for Mike Trebbing? If not, we thank you very much for joining us today, and we'll see you in December.
Thank you.
Thank you.
Thank you.
Thanks. We'd like to continue the conversation. One of the things that wasn't brought up in the call was the special questions, and that was about capacity utilization. If you could talk about the findings from this month's survey.
Right. We focused their attention this month on their current rate of capacity utilization compared to the previous year, and along with that, we also asked them about their plans for capital spending this year next year compared to this year's spending, and discovered some interesting things that the the average capacity utilization rate had increased from November of last year, by our calculations, from about 68% to 72%. And compared to when we asked this question last year on capital spending, we saw a good improvement. For example, in last year's survey, we only had 16% of the firms indicating that capital spending was going to rise in the upcoming year. The number is up to about 38% this year. And likewise, when we looked at the firms that were telling us about increases in capital spending plans, they were the ones that had the higher average increase in their capacity utilization rate over the same time last year. So the firms that are doing better are the ones that are also the ones that are planning expansion in plant and equipment. So it's, again, the survey is confirming some improvement in production and levels of output over last year, as well as a better outlook for capital spending.
Okay. One other area, too, is the employment picture. What did the survey say about that?
We're seeing some positive growth again after the summer. We were seeing some holding off, I guess, of the increases in hiring. This month we had a slight increase in the share of firms reporting employment increases from 20 to 27%, and a little bit of an improvement on the new the employment current index, as well as a fairly large increase in the work week index from October. So again, consistency of the employment numbers with the broad indicators for activity, orders, and shipments.
Okay. Well, thank you. And thank you all for watching our Business Outlook Survey conference call. Please stay tuned for the December 16th conference call. We'll see you at 10 a.m. then. I'm Marilyn Wimp, Media Relations Manager at the bank, and with me today is Senior Economic Analyst Mike Trepping, and we thank him for his comments.